Mark Gibson's Human Rights Channel. Accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
So cost, volume, profit analysis. In this topic, we'll discuss the relationship ng cost, volume, and profit, no? Pero dito, mas pag-uusapan natin, 'di ba, meron kang traditional format of income statement. The traditional format or yung absorption costing mo na discuss din natin during the product costing method, 'di ba? Meron ka sales less your cost of sales because your gross profit less operating income is your expenses. In CVP, we are going to deal with the CVP format of income statement. So you have your sales less variable costs equals your contribution margin less your fixed cost. So you'll get your net income. No? So in CVP, like I said, it examines the behavior of total revenues, total costs, and operating income as changes occur in the output level, selling price, variable cost per unit, or fixed cost of a product. Balikan muna natin yung cost behavior natin. No? Di ba sabi natin na ang variable cost per unit, this is constant within the relevant range. No? But it has to be on a per unit basis. So variable cost per unit is constant within the relevant range. Paano naman ang fixed cost? Fixed cost or total fixed cost is constant again within the relevant range. Ngayon, if the problem is silent, ito na yung mga assumptions, no? Later on we'll also discuss, but there are assumptions within the cost volume profit analysis if the problem is silent. Ito lang ha, the key term is the problem. If the problem is silent, ito yung assumption. Ngayon kung maingay, sobrang ingay ng problem, sinasabi na ng problem, yung data, sundin palagi natin yung problem. So that's the approach under cost and management accounting. Kung ano yung pinrovide na data, yun lang yung susundan natin. So tandaan palagi yan ha, wag mong ipapasok si
pagkain.
Oo nga, nagugutom na rin ako.
Tingnan mo. Okay.
Ipamute naman, no? Diba? Okay. Sige. Ayun. So, nasan ako? Sa pagkain. Oh, so, ito yung mga assumptions natin, no? If the problem is silent. So, number one, the selling price. Selling price remains constant if the problem is silent. So, ano ba yung factors that will increase your sales? Siyempre, meron kang selling price multiplied by the units sold. So it could be the number of units and the selling price. That will increase your total sales revenue. So pag sinabi ng problem na sales revenue will increase by 20%, sabi natin, if the problem is silent, selling price remains the same. So therefore, kung ang selling price hindi nagbago, ano ngayon yung nagbago? Yung number of units. Okay? So the increase in the total sales revenue of 20% was driven by increase in the number of units sold. Sige. Ngayon medyo nag-i-imagine ka pa. Pero later, papakita natin sa problem yan. So, kasi nakita niyo naman, approach natin is theory first and then application sa problem. No? So ngayon, nilatag ko lang muna ano yung mga i-expect natin, no, as we go through as we apply to the problem a little later. So number two, variable cost per unit is constant. Okay, napag-usapan natin yan. No? So imagine, selling price per unit is constant now. Variable cost per unit is constant. Ano ngayon yung behavior ng contribution margin per unit? Sige, tahimik. So kung ang selling price and variable cost mo are constant, so therefore your contribution margin per unit is also constant. No? So total fixed cost na pag-usapan natin is constant. Ngayon, meron pang isang topic, yung sales mix. Pero later on, meron din tayong problem for that. So sabi natin under sales mix, yung mix ng product, no? Ilang product yung mabibenta. So ano bang pwedeng example? Pen and paper. So for every pen, nakakabenta ka daw ng 2 notebooks. So sabi natin, sales mix remains constant if the problem is silent. No? So yun lang yung mga basic assumption natin. Oops, ayaw na mag-move. So also under the CVP analysis, we have break-even sales. Break-even sales, this is the point of activity level where total revenues equal total costs. So there is neither profit nor loss. So ito lang naman yan. Kung ang break-even daw is yung bawi ka lang, di ba? In Tagalog, ano ba? Bawi lang. Ano ba sa Tagalog yun? Walang kita, walang lugi. So, nabawi mo lang kung ano yung ginastos mo. Parang ganun, no? So, therefore, kung wala kang lugi, wala kang kita, yung total sales is enough to cover your total cost. So, therefore, there is neither profit nor loss. Okay? So, there are 3 methods to calculate your break-even. Either you will use equation method, solve for X, contribution method, at ito na yung pinag-uusapan natin na CVP approach, and graphic approach. No? Paano yung graphic approach na muna? Yan muna yung discuss natin kasi methods 1 and 2, this will be heavily used during the problem solving later and also during your problem solving, no? Kasi hindi ka naman mag-graph pag nasa board exam ka. You're not going to solve for the break-even point using graph during board exam, no? So kaya ngayon pa lang i-appreciate na natin ano ba yung graphs under the CVP relationship. So class, assume this line is your total revenue. And this other line is your total cost, ha? Lahat nung nandito sa part na to, this is your profit. Ito yung cost mo. Ito yung revenue mo. So your revenue is higher than your cost. So therefore, you're generating profit. Okay? Under this is your cost and this is your revenue. So you're generating less revenue compared to your cost. So therefore, this portion is your loss, no? Ay, ano yun, class? Yung kung saan nag-meet yung lines ng revenue at saka yung line ng total cost. That's your break-even point. Meaning, under the break-even point, yung total revenue mo is enough to cover your total cost. So therefore, walang profit, wala ring loss. Okay? So that's that just explains the CVP under the graphical method, no? Okay. Sige. Ito class, inisa-isa ko na to kanina. Ito lahat ng mga assumptions na inisa-isa natin. So I'm not going to go back to, I'm not going to discuss that again. No? So ito ulit yung pinag-usapan natin kanina under the CVP, under the CVP or CM format. This is your format, your sales less variable cost, contribution margin, and fixed cost. Again, sa product costing natin, na pag-aralan natin na under variable costs, ang product cost mo is your direct material, direct labor, variable overhead, and variable selling and administrative expenses. Of course, the rest, fixed cost. No? So traditional, while this is also important to know, like I said, in CVP analysis, we're going to heavily use the variable costing or your contribution margin format of income statement. Ayaw mag-down. Okay. Ito, babalikan lang natin, sales minus variable cost is your contribution margin less the fixed cost is your profit. Pero dito pa lang, alam mo na pag minultiply yung number of units with the selling price per unit, yun yung sales. No? Dito papasok kasi yung mga assumptions natin. Sabi ko kanina, if the problem is silent, the selling price is constant. If the problem is silent, variable cost per unit is constant. Again, if the problem is silent, sobrang tahimik niya talaga, it goes without saying that your contribution margin per unit is also constant. Siyempre, constant yung dalawa. Sinubtract mo lang naman. Pwede bang mabago pa yung behavior ng contribution margin? So, hindi na pwede mangyari yan. Na? Ito ulit yung sinasabi natin, pero this time, i-prove lang natin. No? So, sabi natin, break even. Pag break even, walang talo, nakabawi ka lang. So, that's sales less variable cost. Is your contribution margin less fixed cost, so profit zero. Kasi nga, ang sales mo is equal to total cost. Meaning, your contribution margin is equal to your fixed cost. So, nandito na how to compute your break-even point. No? So, to calculate your break-even point in unit, so BEPU, to indicate units, so that's fixed cost over CM per unit. In pesos naman, break-even point in pesos, sabi it's pesos daw, no? So that's fixed cost over CMR. CMR is your contribution margin ratio. So pinresent natin yung mga formula, but later on, we'll apply it with the problem, no? So here, diniscuss ko rin earlier about sales mix. Sales mix is, eto nga, for example, if the sales mix is so for example, if the sales mix is 3:1 for products A and B, the package would consist of 3 units of product A and 1 unit of product B. Yun yung sales mix natin. Ngayon, meron din ba tayong way to calculate break-even kung in packages, no? Or in if we have multiple products? Kasi syempre, hindi naman palagi isa lang ang product mo, no? So sales mix can be, break-even can also be calculated kung meron kang multiple products. Pero paano? So it's calculated by fixed costs over weighted average contribution margin. So later on, I'll also teach you how to calculate your weighted average contribution margin. So hindi nagbago yung formula, nagkaroon lang ng weighted average. Sige. Okay. Along with the CVP analysis are also risk and uncertainty. So discuss natin isa-isa. Number 1, margin of safety. This indicates the amount by which actual or planned sales may be reduced without incurring a loss. It is the difference between actual or planned sales volume and break-even sales. So ito daw, margin of safety class, ito daw yung pinaka-comfort zone mo. Ibig sabihin, either bumaba ka dyan, hindi ka pa rin mag-i-incur ng loss. No? So it is the difference between the actual or planned sales and the break-even sales. Ano naman yung operating leverage? Operating leverage is a measure of the extent to which fixed costs are being used in an organization. So the greater the fixed cost in relation to variable cost, the greater is the operating leverage available and the greater is the sensitivity of income to changes in sales. Simply, ito lang naman yung pinapakita lang ng operating leverage yung, kasi 'di ba bago ka magkaroon ng income, you have to make sure that your contribution margin is greater than your fixed cost. So, operating leverage is simply saying ano ba yung kakayahan mo to cover your costs in such a way that you're going to generate income. No? Degree of operating leverage. So nilagyan lang naman ng degree. So measure of sensitivity of profit changes to changes in sales volume. It measures the percentage of change in profit that results from percentage of change in sales. No? So later on, we'll also have a sample problem to further discuss degree of operating leverage. Bakit pa ayaw mag-next? Okay, so here we just provided the formula to get your DOL. But remember, DOL is also your OLF. So they're being used interchangeably in a problem. So be careful. So reminder that degree of operating leverage is also your operating leverage factor. So that's calculated by dividing contribution margin over operating income. So percentage change in profit. So that's DOL, excuse me, multiplied by the percentage change in sales. Okay. So ito na rin yung diniscuss ko kanina. So these are the factors affecting profit. No? Sige. Ngayon, try natin sa problem. No? I'm sure mas exciting kasi pag ina-apply sa problem yung theory. So isa-isay natin. Ayaw ako Sige lang, ayusin ko lang screen ko. Okay. So, puntahan natin si problem. Exercise number 1. Pero ang pinapakompute sa atin dito, so actually, there are 3 requirements. No? Compute the contribution margin per unit and calculate break-even point. Calculate the contribution margin ratio and the break-even sales revenue. Pag sinabing break-even sales revenue, this is your break-even point in pesos. And then the divisional manager plans to increase the advertising budget by 20,000. This will increase the projected sales revenue by 40%. By how much will operating income increase or decrease as a result of this action? Okay. Refer to the, syempre alisin ko to kasi yan yung sagot. Okay. Refer to the original data. How much sales must be generated to earn tax profit, pre-tax profit of 180,000? How many units must be sold to earn an after-tax profit of 75,600? Assume a tax rate of 30%. How much must sales be to earn pre-tax profit of 20% of such sales? So ganito class yung problem, it appears na ang daming hinihingi. Pero napansin mo, ito lang naman yung provided data. So, ang tuturo ko sa inyo ngayon is paano yung approach in calculating problems like this, no? So, sige. Tingnan natin ngayon yung punta tayo sa Excel para isa-isahin natin. Okay. So, problem number 1, ang sabi lang una, compute the contribution margin per unit. Isa-isahin lang natin and then calculate break-even point. Siyempre, latag na natin yung data. So sabi natin 400,000 given, variable cost given, so 240, 180, 16. Nilagay ko lang, wala pa tayong ginagawa. Ngayon, paano natin compute yung per unit? So given naman yung number of sales . So 400,000 over 20,000 units. So that's 20. So that's your selling price. Of course, variable cost, 160,000. Saan mo divide? Doon din sa number of units sold. No? So that's 20,000 units. 8. Subtract the 2. So you'll get your contribution margin per unit of 12. Or the easiest way is 240,000 divided by 20,000 units. So you'll also get 12%. No? So kung napansin mo, kung familiar ka na dun sa CVP format of the income statement or your variable costing, wala nang, madali na sa'yo mag-compute how much would be your CM per unit, no? So ngayon, ang next na tinatanong is break-even points in unit. Pero alam na natin yung formula, kaya nga pansin mo, sinusulat natin palagi yung formula para at least mas maaalala mo, no? So ang formula to get your break-even point in units, so that's fixed cost over CM per unit. So that's your contribution margin per unit. Ayusin ko lang para pag nag-review ka, mas mabilis. CM per unit. So fixed cost over CM per unit. Given ang fixed cost mo, so that's 180,000 divided by 12. Na-compute na natin, that's your CM per unit. So therefore, your break-even point in unit is 15,000. So sabi natin, pag nakabenta ka daw ng 15,000, bawi ka na. Mamaya patunayan natin. Ha? Okay? So next requirement is calculate the contribution margin ratio and the break-even sales revenue. So sabi natin, dahil meron naman tayong given numbers here, mas madali natin ma-compute how much is your contribution margin ratio. Pag contribution margin ratio, that's actually your CM over sales. So that's 240,000 divided by 400,000 or 60%. No? So your sales represents 100% less variable cost. So variable cost ratio is 160,000 over 400,000. Pakita ko sa inyo, 160,000 over 400,000. So that's 40%. Deduct the 2, that's 60%. Yun yung kung gusto mo, no? Dahil nagre-review ka pa lang naman, inuulit-ulit mo, no? Pero pag bihasa ka na, you can always do shortcut, no? Paano yun? Ay alam mo na yung contribution margin mo is 240. Given naman yung sales. So that's 240 divided by 400,000. So that's 60%. So now meron na tayong CMR. We can now compute for the break-even point in pesos, no? So kaya yung P, small pesos. So that's fixed cost over CMR. Ano nga yung CMR? Na-compute na rin natin. So that's 60%. So 180,000 over 60%. So that's 300,000 pesos. Okay? Question muna. Baka may hindi nakasabay. Pwede natin ulitin yan. Kasi yan na yung pinaka-focus ng discussion natin. Okay, sige. Kung wala, proceed tayo dun sa other data. Pero meron pang other could be, meron pang ibang question, no? Yung break-even point ratio. So pag tinanong naman sa'yo break-even point ratio, so that's break-even point sales over your total sales. So i-ano ko lang to dahil first time nakita. So this is break-even point, pero kunin ko na lang to. Break-even point. So that's break-even point in pesos over your total sales. So na-calculate na natin yung break-even point na 300,000 over your total sales. So 400,000. So pag tinanong, break-even point ratio, so the answer is 15%. Another way to calculate is through the use of units, no? Pwede palang units. So another way is break-even point in units, and of course, total sales, total units sold. So in this case, meron na rin tayong break-even point in unit. So that's 15,000 over the total units sold. So that's 20,000. So ang pinapakita ko lang sa inyo dito, class, whatever is available, yun yung gagamitin natin to calculate for the break-even point, no? So there are different ways to calculate. Depende lang kung ano yung given. Okay? So that's break-even point. No? Number 2, baba ako dito. Same lang to para lang hindi ko na ibababa yung problem. Number 2, ang sabi, the divisional manager plans to increase the advertising budget by 20,000. This will increase the projected sales by 40%. So mag-increase daw ang revenue natin by 40%. Ha? How much? Ay, sagit lang pala. Meron pala tayong gagawin dito sa isa. Kasi 'di ba sabi ko papatunayan natin na wala nga tayong revenue. So, kunin ko lang 'to. Lagay ko dito. So, sabi natin, ilan units daw? Break even, 15,000. Magkano ang selling price? 20. Magkano ang variable cost? 8. Magkano yung CM per unit? 12. Saan ko nakuha 'to? Yun yung na-compute natin kanina. Kasi remember, in CVP analysis, selling price per unit is constant. Variable cost per unit is constant. Ergo, your CM per unit is constant. So therefore, para mas mapabilis ang compute natin, pero dahil nga gusto natin ma-prove na zero nga yung revenue, kunin lang natin yung total sales. So 15,000 times 20. 15,000 times 8 to get your variable cost. So your contribution margin, magkano yung fixed cost? 180,000. So therefore, your income is 0. Okay? So yan. Yan, para pag nag-review ka, mas mabilis. Okay, so napatunayan lang natin na tama yung calculation natin. Pero syempre, eto, ginagawa lang to during the review. Wag mo nang, kung gusto mo makasigurado ka at may oras ka naman during quiz or during the board exam, fine. You can always do this, no? But like I said, please make yourself familiar with the different formula to arrive with your break-even point. No? Okay, with that, let's go to the second requirement. Sabi natin, ang tinatanong dito is by how much will operating income increase or decrease? So sabi, sales will increase daw by 40%. So ginawa ko, ito yung data na provided, 400, 160 to 40, yan pa rin yun. Sabi, sales will increase by 40%. So dinagdagan lang natin. Naging 560 na siya. So 400,000 times 1.4 or 140%, so that's 560,000. Syempre, kung mag-i-increase ang sales mo, mag-i-increase din ang variable cost mo by the same rate. So that's 224,000. Kunin mo lang yung difference ng dalawa to arrive with your contribution margin. But again, along with this, sabi rin sa problem, advertising budget will increase by 20,000. So previously, our fixed cost is just 180,000, but with the increase in advertising budget, it will be 200,000. So the total income will be 136,000. Be careful. Kasi ang tinatanong yung problem is by how much will operating income increase or decrease? So the answer is it will increase by 76,000. Kasi previously it was 60,000 ayun, given. So now with the change in sales and increase in fixed costs, it will increase to 136,000. So therefore, total profit will increase by 76,000. Okay? Sige. Sige. Pag-usapan naman natin tong requirement number, kita pa rin naman, no? Number 3. So, sabi sa date requirement number 3, refer to the original data. So, ito tayo ha. How much sales must be generated to earn pre-tax profit of 180,000 pesos? So, meron tayong formula dyan. Sales in pesos with desired profit. So, it's fixed costs plus the desired profit over your CMR. Pero class, na-calculate na kasi natin yung CMR sa taas, no? So, ibababa na lang natin. So, your fixed cost is 180,000. Tapos, magkano nga yung gusto niyang increase? Ay, magkano yung gusto niyang profit? 180,000. So, that's 180,000 fixed cost plus the desired profit of 180,000 over the CMR, which is 60%. No? So, sales in pesos would be 600,000. So, ano yan? Dapat daw makabenta ka total of 600,000 pesos to earn 180,000. Again, pwede natin i-prove yan, no? So, ayan, prove na natin. So, 600,000, alam mo na yung CM ratio mo is 60%. So, that's 360,000. How much is your fixed cost? 180,000. So, you'll get 180,000 na profit. So, pinrove lang natin na with 600,000 sales, kikita tayo or magkakaroon tayo ng profit of 180,000. Okay? So, hopefully nakakasunod pa. Kung hindi, pwede natin ulitin, no? Magsabi lang kayo. Next is how many units must be sold to earn an after-tax profit of 75,000. Assume a tax rate of 30%. Ito naman, ang tinatanong naman dito is number of units para daw makakuha ng after-tax profit of 75,600. Pansinin mo, ang formula natin hindi naman nagbabago. Depende lang dun sa hinihingi ng problem. So it's the same, no? So it's fixed cost, but this time, ang hinihingi niya na is desired profit after tax. So kaya nilagay na natin dito is net profit. Okay? So how to compute that? So fixed cost mo given 180,000 plus, ayun, binigay, after tax profit of 75,600 over 1 minus the tax rate. Tax rate is 30%. So that's 288,000. Ngayon, na-compute na natin yung CMR, your contribution margin ratio, na 60%. So therefore, total sales in pesos is 480,000. Okay? That's total sales in pesos. Ha? Pero ang tinatanong is total sales in units. So kunin mo lang, how much is your selling price? 20. Selling price per unit is 20. So that's equivalent to 24,000 units. Dito, pinrove na natin kung tama ba. So at 24,000 units, meron ka daw sales na 480,000. Of course, your your variable cost and CM ratio remains the same. So this is equivalent to 60%, less your fixed cost of 180,000. Meron ka ngayon operating income na 108,000. Ilan daw ang tax rate? 30%. So multiply by 30%. So you get your tax expense of 32,400. Then deduct the 2. So makukuha mo yung net profit mo na 75,600, which is yun yung hinihingi ng problem, 75,600. Okay? So that's requirement B. Finally, meron tayong requirement C. How much sales must be to earn a pre-tax profit of 20% of such sales? So dito naman, pinapakompute sa atin yung total sales in pesos with desired profit ratio. Okay? So, paano naman yung pag-compute? It's fixed cost over CMR less the profit ratio. So, again, provided sa atin yung fixed cost, that's 180,000. Na-compute na natin yung CMR natin, yung contribution margin ratio natin, 60%. Less the 20%, so that's given. Ito yung profit ratio. Ito daw yung profit na gusto mong makuha. So that's equivalent to 20%. So therefore, 450,000 pesos. So that's answer to requirement C. Ngayon, paano pag daw ang tinanong is in units? So meron din tayong way. Palitan mo lang yung instead of ratio, kunin mo yung units. So, CM per unit, nakuha mo na natin yan kanina. Kung hindi mo naalala, that's 12 less, less your profit per unit. So, profit per unit, syempre, 20 is your selling price multiplied by the profit ratio of 20%. So that's 180,000 over 12 minus 20. Yung 20, that's your selling price, ha? Huwag mong kakalimutan. So that's 22,500 units. Okay? So i-prove daw natin kung tama yung nakuha natin. So ulit yung statement natin, no? Sales less variable cost and so on and so forth. So sabi natin 22,500. Na-compute na natin yan, 22,500 units. How much is the selling price? 20. Your variable cost is 8. Pwede na nga dito lang tayo mag-start, no? Kasi alam na natin to, yung 12. Oops. So 270,000 or 22,500 multiplied by 12, same yan, 270,000. Less the fixed cost of 180,000, meron tayong operating income na 90,000. So i-test natin. Is 90,000 20% of 450? The answer is yes. So 90,000 over 450,000, so that's 20%. Yan yung nire-require ng problem. So therefore, the answer to question number C, question C or requirement 3.C is 450,000. How much is the sales to earn pre-tax profit of 20%? So that's 450,000. Ang key really, iuulit-ulitin ko, hindi ako magsasawang ulit-ulitin na for you to be really familiar with the formula is to practice. So, ito yung mga formula, meron tayong sample problem. Ang gawin nyo is practice agad doon naman sa mga exercises sa book. No? Okay. So next, same problem pa rin tayo, pero kung napapansin mo doon sa material natin, so that's exercise number 1 pa rin, pero requirement number 4 and 5. Buuin na natin yung buong topic, no? So napag-usapan na natin yung break-even point, napag-usapan na natin yung break-even point with desired profit, desired units, and profit ratio. Ituloy na natin doon sa margin of safety. Okay? So number 4, ang requirement is compute the margin of safety based on the original income statement showing the projected operating results for the coming year. So same data. So nilagay lang ulit natin. Paano ngayon yung pag-compute ng margin of safety? So sabi natin, it's actual sales less the break-even point in pesos. Break-even point in pesos, na-compute na natin kanina sa taas. That's actually your fixed cost less over your CM per unit or CMR, no, in this case. It's either i-compute mo ulit or kunin na lang natin dun sa taas. No? So that's 400,000 less 300,000. So that's 100,000. Margin of safety is 100,000. Ibig sabihin, kung bumaba yung sales mo by 100,000, okay ka pa. So hindi ka pa mag-i-incur ng losses. No? Because the break-even point in pesos is 300,000. Ngayon, paano kung ang gustong ipakompute sa'yo is margin of safety in units? So, palitan mo lang naman yung, yung given mo in units naman. So, actual sales in units less the break-even point in units. So, actual sales in units provided plus the break-even point in units, na-compute na natin yan kanina. So that's your fixed cost over your CM per unit. So either i-calculate mo ulit or kunin lang natin sa taas. So the margin of safety in units is 5,000 units. Paano naman kung ang tinanong sa'yo is ratio? Margin of safety ratio. Actually, that's just margin of safety over the total sales. So margin of safety, na-compute natin kanina, is 100,000 over the total sales given. So that's 25%. So kung napansin nyo class, binigay ko lang dito yung different approach to calculate your margin of safety. It really depends on the data provided. Okay? So that's margin of safety. I-todo natin para makapture yung other part nung I think this is the last part of the CVP analysis on the operating leverage, degree of operating leverage. So, paano ba yung ulit yung pag-compute ng degree of operating leverage? Actually, that's just your contribution margin over profit. So, contribution margin is 240,000. Ayun, provided pa rin, over profit of 60,000. So your degree of operating leverage is 4 times. Okay? So ibig sabihin, you can consume your fixed costs 4 times and you're not going to incur any losses. No? So that's degree of operating leverage. Ngayon, sinabi rin dito, if sales revenues are 20% greater than expected, what is the percentage increase in profit? So, paano daw makompute yun? Sabi, percentage change in sales multiplied by the degree of operating leverage. So, therefore, that's 20%. Yun, yung binigay na change in sales multiplied by the degree of operating leverage or 4, so 80%. Patunayan natin yan. Ha? Sabi ulit, ha? What is the percentage increase in profit? So that's 80%. So the degree of operating leverage, another way to calculate is percentage change in profit over change in sales. So that's 80% over 20%, same. Makukuha mo is 4 times. So this is another way to calculate your degree of operating leverage. Sabi ko kanina, patunayan natin. No? So kung 80% nga siya. So sabi natin, ito yung current, pero di ba sabi mag-i-increase daw by 20%. So kunin natin yung increase, either kunin mo yung 20% of 400,000 or simply multiply it by 1.2. Either way, parehas yung makukuha mo sagot, 480,000. So get the variable cost, so that's 192,000. Deduct the 2, makukuha mo yung contribution margin mo na 288,000. Ngayon, less the fixed cost, you'll get 108,000 na operating income. Ngayon, tama ba? Is that 80%? So that's 80%. So 48,000 over 60,000. That's the percentage increase in profit. No? So that's the whole topic of CVP analysis in one problem lang, no? So very comprehensive yung problem. Na-compute natin or na-apply natin lahat ng concept ng CVP analysis just by looking at this data. Pero hindi tayo matatapos diyan. Try natin isa pa. Okay? Ito naman. Exercise number 2. Pero this time, kayo muna. Saka natin compare yung sagot, no? Pampalakas company makes a high energy protein drink. The selling price per liter is 10.8. Variable cost per liter is 6.48. Total fixed cost per year is 474,900. The company is currently selling 120,000. So yan yung yung units sold, no? 120,000 units or liters per year. What is the margin of safety in liters? What is the degree of operating leverage? If the company can increase sales in liters by 25%, what percentage increase will it experience in income? Sabi pa, prove your answer using income statement approach. O sige, try nyo muna yan, then sagutan natin together.
Sir, excuse po.
Sige po.
Pwede pong palipat saglit sa Excel, mag-base lang po dun sa
Oo ba?
example nyo.
Sure, sige. Dito ba ako? Kasi
Apo.
margin of safety, no? Pag banlitan ko, kita pa ba?
Apo, readable.
Sige.
Thank you po.
Okay. Gawin ko, ilagay ko lang dito yung given para at least masabayan nyo na. Okay. Sige, try natin yung number 2. Lasing na ito para hindi nakakalito. Ano muna sagot nyo bago natin i-reveal yung answer? O diretso na tayo sa solution. Sige, check nyo na lang kung tama yung ginawa niya na. Sige. So, ganun ulit yung approach natin. Isa-isayin lang natin. Kita ba? Okay. So, kung napansin nyo, approach ko palagi is sulat, no? Lagay lahat ng given. So, selling price, 10.8. Variable cost, 6.48. Unit sold, 120,000. So, from there, kinumpute ko yung total sales, total variable cost, less fixed cost. So, meron akong operating income na 43,500. Ang tinatanong una, margin of safety in units. So, how to get that? Meron kang actual sales in units less break-even point in unit. So, una, compute ko muna yung break-even point in units. So, sabi natin, to compute your break-even point in units, that's fixed cost over CM per unit. So, meron tayong fixed cost, 474,900 over the CM per unit. So, that's 4.32. So, therefore, your break-even point in unit is 109,931. So, meron kang 120,000 units sold less 109,931 na break-even point in unit. So, that's 10,069.44 liters, no? Lagay ko to liters. Parehas ba tayo ng sagot?
Opo.
Okay, good. Si Jana ba to ulit?
Si Shine po.
Shine. Oh, sige. Very good, Shine. Okay. So that's margin of safety in units. Number 2, letter B, degree of operating leverage. Sabi natin, to calculate the degree of operating leverage, that's contribution margin over profit. So how much is contribution margin? Ayun. Kaya nga sabi ko sa inyo, i-prepare nyo lang to, mas mabilis na. So that's 518,400 over 43,500. So that's 11.92 times. Ang approach class, during practice, palagi kang mag-prepare na to. Kasi once na very familiar ka na with the whole process, pwede ka na mag-shortcut. Na? So during practice, isulat mo palagi yung formula, sulat mo palagi lahat ng given. Ganun palagi ang approach niyan. So letter C, parehas ba tayo sa 11.92 times?
Yes po.
Okay, very good. So if the company can increase sales in liters by 25%, what percentage increase will it experience in income? So ito lang naman tinatanong yung yung percentage increase in income. Pero alam na natin mag-compute niyan. So that's degree of operating leverage multiplied by the percentage increase in sales. So that's 298%. No? Yan yung sagot. Pero sabi, i-prove daw natin using income statement approach. So sulat mo lang lahat ng given ulit. Sales, syempre, sabi magi-increase daw by 25%. No? So dito ka ngayon. So 1296 yung given kanina multiplied by 1.25, so that's 1,620,000. Remember kanina sinabi ko, if the problem is silent, selling price is constant. So therefore, kung nag-increase yung sales mo by 25% at ang selling price mo is constant, ano ngayon yung nag-drive ng increase? It's the units sold, no? So, hindi na to yan. Baka malito ka, alisin ko yan. Oops. Dahil naka-compute pala to dyan, hindi natin pwedeng galawin, no? So, therefore, ang nagbago is yung number of units sold. So, patunayan natin. Pwedeng ilang units na ngayon to equivalent, no? So, that's 1,620 over 10.8. So, actually, that's equivalent to 150,000 liters. Okay? So, tuloy natin yung calculation. Makukuha mo ngayon yung contribution margin mo na 648,000 less 474,900 na fixed cost. Makukuha mo yung 173,100 na operating income. Okay? Ang compute sa'yo is percentage increase. So, marunong ka na mag-compute niyan. So, that's 129,600 over 43,500, which is equivalent to 298%. No? Okay? So, sana parehas tayo dito sa 298%. Shine, parehas pa tayo nakuha?
Apo.
Okay, good. Sige. Tingnan natin yung problem number 3. Exercise number 3. Zaluki Company is considering the development of either of two products. O, ito na. Ito na yung last topic natin. So, remember, pinag-usapan natin yung CVP, pero pwede rin ba natin ma-compute yung CVP or your break-even point kung meron kang multiple products? So ito, sa exercise number 3, i-demonstrate ko lang sa inyo how to calculate using algebraic equation. No? So solve for x. No? So we have product 1 and product 2. Sige, punta na ako agad dun sa sample. Kasi 'di ba kanina sabi ko there are 3 ways to calculate to do your analysis on CVP. So una, via contribution margin approach, yun nga variable costing natin, yung sales less variable cost equals your contribution margin, less fixed cost equals your operating income. Pangalawang approach is through by the use of graph. Yun yung dinemonstrate din natin kanina. Another approach is through the use of algebraic expression. So ito, patunayan natin. Zaluki Company is considering the development of either of two products, product 1 and product 2. So provided din yung annual fixed cost, 264 and 408,000. Regardless of which product is introduced, the anticipated selling price will be 60 and the company will pay 10% sales commission on gross peso sales. Zaluki will not carry an inventory of these items. At what unit volume level will the profit loss on product 1 equal the profit loss on product 2? So class, ito lang naman ang tinatanong dyan. Meron kang dalawang product, at what level daw na yung profit and loss mo or profit or loss mo dun sa product 1 and product 2 will be equal. So tinatanong ilang units yung dapat ma-produce para maging equal yung profit and loss mo. So paano natin computein yan? Dahil meron kang dalawang product at ang kina-calculate mo talaga dyan is yung point where you will be indifferent. Ibig sabihin, dahil nga meron kang dalawang options, ito yung topic on relevant costing. Meron kang dalawang options. Ano ngayon yung option na mas okay, kaya natin ginagawa to. Pero in this case, kinukuha natin yung level at which wala tayong kailangan piliin. So same sila. Ganun yung nire-require ng problem. So therefore, in that case, let X be the indifference point in unit. Meaning, pag sinabing indifference point, ito yung equal footing. Ibig sabihin, parehas na magiging result, no? So, paano daw ipag-compute? CM per unit minus fixed cost. Ito yung product 1, dito yung product 2, ha? CM per unit minus fixed cost. Pero bago tayo makakompute yung CM per unit, kunin muna natin magkano talaga yung CM. Baka kasi dito pa lang may magkamali ka na. So selling price, sabi 60. The anticipated selling price will be 60. So in both products daw. Variable manufacturing cost, ayun, 39.6 at saka 30. Pero meron ka ring variable selling, which is 10% of sales commission. So that's 10% of 60. So 6 pesos, no? So deduct the 2. So you'll get your contribution margin per unit. So wag kang malilito dyan. Tandaan, sinama lang natin yung variable selling. Okay? So with that, i-derive na natin yung equation. So CM per unit minus fixed cost, 14.4 and X minus 264,000. So that's your fixed cost. Sa other side of the equation, that's 24X minus 408,000. That's your fixed cost in product 2. So that would be 9.6. So gawin mo na yung mga transposition. So 14.4, yung 24x, lipat mo dito sa kabila. So that would be 14.4 less 24. So that's 9.6x equals 144,000. Paano yung nakuha 144,000? 408,000 less 264,000. So to solve for x, 144,000 over 9.6. So that would be 15,000. Ano ba yung 15,000 na yan? Sinasabi at 15,000 units, si product 1 and product 2 will be indifferent. Ibig sabihin, si product 1 and product 2 will generate the same level of profit or loss. Patunayan natin. So 15,000, so that's 15,000 multiplied by 60. Nagkataon lang dito, class, na ang selling price ni product 1 at product 2 is the same, no? 60. Pero hindi palagi yan. Sabi ko, sa cost accounting or management accounting, we have to follow kung ano yung sinasabi ng problem. So in this case, sinabi niya na ang selling price daw for both product is the same. So kaya nagkataon lang na parehas yung total sales mo dito. How much is your variable variable manufacturing cost. So that's 15,000 multiplied by 39.6. Ito naman is 15,000 multiplied by 30. So ganun din yung variable selling mo, 15,000 multiplied by 6. Nagkataon lang ulit yan. So your contribution margin is 216,000 for product 1 and 360,000 for product 2, less the fixed cost of 264 for product 1 and 408 for product 2. So ayun, nakuha mo na yung income. So tama pala na at 15,000 units, si product 1 and product 2 will have the same, in this case, loss of 48,000. Ngayon, kailan ba ginagamit to? Parang sabi mo ba, parang pinapa-complicated nyo naman yung sitwasyon. Pwede mo nang ang pa-compute sa akin yung break-even point, no? Pero this time, pina-compute mo pa kung kailan magiging equal yung dalawa. Ginagamit tong approach na to kung kailangan mong mag-decide ano sa dalawa yung pwede mo lang ituloy. So I'm not there will be a topic on cost management. So that's differential cost analysis. So that's chapter 8 where we discuss this in more detail pa, no? So this time tinatanong lang sa atin will be the indifference point, no? So ngayon, paano pag ang tinanong sa'yo, anong pipiliin mo? Product 1 ba or product 2? O sige nga, anyone. O sige, ako na lang ulit. So dahil parehas naman silang loss, ang sagot mo is product 1 ba or product 2? So pinakompute kasi sa atin is indifferent. Ibig sabihin, parehas lang sila ng footing. Parehas silang pangit, wala kang pipiliin. Pero pwede ba yun? So in that case, kung ganito yung data, we have to make sure that we increase our sales in order for us to generate income, no? So that's exercise number 3 through the use of algebraic expression. Now let's go to exercise number 4. This will be the last example. This time will be using sales mix. Ito na yung sales mix, no? Kanina ang example natin, a pen and a notebook. So ilang pen yung nabebenta, ilang notebook yung nabebenta. So this time, coffee and bagels, no? So ang ratio daw is every time na nakakabenta ka ng 1 bagel, you actually sells 4 cups of coffee. So therefore, the ratio is 1:4. 1 bagel is to 4 cups of coffee. Okay? So, okay. Isa-isahin natin yan, pero dito na ako sa whiteboard ko. Whiteboard is the Excel, no? Oops. Kita pa ba? Oops. Hindi. Sige. Isa-isay natin, calculate the break-even point in units in pesos for coffee and bagels, no? Pero bago yan, 'di ba, ang approach natin is compute muna natin how much is your contribution margin in unit. Isa-isay natin. So coffee, ang selling price is 50 and 80. Of course, binigay yung product ingredients and hourly sales staff cost per unit. So that's 5 and 10. Also yung packaging of 5 and 10. So kinumpute lang natin yung total variable cost mo. So that's 20 for coffee and 40 for bagels. So to get your contribution margin, syempre deduct mo lang yung sales less your variable cost. So that's 30 and 40. So this time, meron ka ng contribution margin per unit. Ngayon, kung gusto mong kunin naman to in pesos, syempre, multiply mo lang dun sa number of units sold. So that's 30 multiplied by 4,000. So that's 120,000. And 40 multiplied by 1,000, so that's 40,000. Ngayon, paano ba yung pag-compute ng break-even point? Sabi kasi dito, calculate the break-even point in units and in pesos for coffee and bagels. Gusto ko na rin magkape, no? 1124. So that's fixed costs. Familiar ka na kung paano mag-compute ng break-even point. Pero this time, meron ng sales mix. So therefore, ang kukumputin na natin is weighted CM. Your weighted contribution margin. Paano pag-compute ng weighted contribution margin? So that's total CM over total units. Total units is 5,000. Total units sold, ha, para hindi ka nalilito. So that's 160,000. Saan ko nakukuha yung 160,000? Total CM. So yung CM ng dalawang product, 160,000 over 5,000. That's your total units sold. 4,000 kay coffee. Ayun, plus huwag malilito. 4,000 kay coffee, 1,000 kay bagel. So that's 5,000 in total. So makukuha mo ngayon yung weighted average CM per unit of 32. Okay? So fixed costs given, that's 100,000 plus 40,000 over the weighted CM of 32. So that's 4,375 units. Pero anong unit? Ilan dyan ang coffee, ilan dyan ang bagel? Okay? So, ilan nga ba? So, sa out of 4,375, meron tayong sales ratio. Paano natin na-compute yung sales ratio? Sabi natin, di ba? 4 cups of coffee is equivalent to 1 bagel. So, that's actually 80% coffee. Nakakasunod ba? And 20% bagel. Paano ko na-compute yung 80-20? It's either 4 over 5, 1 over 5. So, ganun. Yung total. Okay. So, that's 80% and 20%. Of course, kinuha mo lang naman yung ratio, no? So, that's 3,500 for coffee and 875 for bagel. So that's in units, no? So in multiple choice problem, baka pwedeng itanong sa atin is how many units of bagel to break even. So answer is 875 and 3,500 coffee. So that's the ratio, no? Ito class kasi, tandaan, nagiging paano ba to? Kino-compute lang natin yung sales mix ratio or break-even point ratio in sales mix kung meron kang 2 or more products. So, ito yung company or enterprise na nagbebenta ng mas maraming product. It's not just one, no? So, in our example, coffee and bagel. So, kino-compute lang natin, ilan ba yung dapat nating mabenta na coffee, ilan ba yung dapat nating mabenta na bagel to break even. So, ibig sabihin, para makabawi lang. So, this is how you compute for your break-even point in units. Paano kung break-even point in pesos? So, multiply mo lang with the selling price. So, that's 3,500 multiplied by the selling price, 50. In this case for coffee. So that's 175,000. And then 70,000 for bagel. So total break-even point in pesos is 245,000. Ngayon, I've also presented different approach to in computing the break-even point the weighted average contribution margin, no? So yan. It's either by the sales mix ratio. Ayan, kung napansin mo, same yung nakuha natin. sales mix ratio in percentage or simply sales mix ratio, yung depende dun sa number. Sabi dito, 4 cups of coffee and then 1 bagel. So, the same pa rin yung makukuha mo, no? Similarly, binigyan ko rin kayo ng option how to calculate for your weighted CMR. So, that's 57.14. Nakuha mo na rin yan, total CM over the total sales. Tandaan, in sales mix, palaging kinocompute is yung total. Total ng dalawang product. Ha? Okay? So, kunin na natin ngayon yung requirement letter B. Baba ko lang dito. So, requirement letter B, if the sales mix is 4 cups of coffee to 1 bagel, so alam mo naman yan, how many units of each product does Rue need to sell to earn operating income before tax of 40? So, of 40,000. Ito rin yung pinag-usapan natin kanina, pero this time, meron ng dalawang products. So, that's fixed cost plus the desired profit over the weighted average CM per unit. So, that's 140,000 plus operating income of 40. Ito yung desired profit mo over the weighted average CM per unit. Pero this time, na-compute na natin to sa taas. So, kunin na lang natin. No? So, therefore, that's 5,625 units. Units of what? So, kunin ulit natin yung ratio. 80% coffee and 20% bagel. So, that's 4,500 cups of coffee and 1,125 units of bagel. I-prove natin kung tama ba yung result na nakuha. Pero this time, instead na computing ko po lahat, punta lang ako sa CM. Kasi ang gusto ko lang naman ipatunayan 40,000 ba yung profit ko. Paano yung sa CM? Di ba na-compute natin yung CM, 30 and 40. 30 kay coffee. So that's 4,500 multiplied by 30. So that's 135,000. 1,125 multiplied by 40, that's your CM per unit for bagel. So that's 45,000. Total mo yung dalawa, less mo yung fixed cost na 140,000. So you'll get 40,000 profit. So pinatunayan lang natin na by selling 5,625 units or 4,500 cups of coffee and 1,125 units of bagels, will get 40,000 pesos in revenue. Okay, so that actually ends our discussion on CVP.
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!